What's going on YouTube? John with Tactical Trading here. Here with a short video. In fact, today I'm going to be coming out with a couple of videos, but this is one that I thought was rather important. And these are my rules when you're first starting out in trading and that you should follow throughout your trading career, especially if you want to make this a career. First thing is study every day. Be involved every day. You can never know enough, you can never be smart enough, you can never be good enough. So you want to study every day and be involved in the markets every day. The next is cut losses intelligently. But when you're first starting out, you want to cut losses very quickly. Cut losses immediately. And this is an example. Say you're getting into a stock at $1 for the break of $1, so you're getting in at 101. You want to sell out at 120. You say, well, I want to make myself my 20% profit. Well, since I use a 2-to-1 profit to loss ratio on every trade, I definitely want to get out at 90 cents or 91 cents. So if you start to see that stock sinking down, it breaks below $1, it starts breaking, and you starts dropping down to the 90-cent level, and you know you want to get out at 90 cents, be ready to pull that trigger and get out. So you want to cut losses and stick to your risk on every trade. The next one is have a plan on every trade. Know your risk, use mental stops, and follow your rules, which are very important. So you want to make a set of rules and you want to follow those rules. So have a plan on every trade. The next one is let price action and plan dictate your entries and exits. Again, let price action and your plan dictate your entries and exits, not emotion. And again, follow your rules. The next one is always keep a trade journal. Keep a trade journal or keep a spreadsheet on all of your trades. You want to put where you got the ticker symbol, where you got what sector it's in, where you got in, where you got out, and what setup you were using on that particular play. Again, keep a trade journal on every single trade. And this way, you're able to see what setups work for you and what setups don't work for you. What setups are giving you your high percentage gains, which ones are not giving you gains. And this way, you can create a better trade plan going forward. The next one is always look at a stock's past performance to predict future action. Again, always look at a stock's past performance to predict future action. And what I mean by this is always look at the daily chart. And what I mean by daily chart, if you don't know, learn candlesticks, because it's one of the most important things in trading is to know how to read candlestick charts. Is when you're looking at that daily chart, each candle represents one day. And typically those charts go back for 1 year or 3 years. I usually look at the 1 year and then look at the 3 year. And the way I look at charts is I look at long term to short term. So I start at the 3 year, 1 year, then I look out at the 6 month, and then I go to the 5-minute chart or 15-minute chart, 5-minute chart, 1-minute chart. I always scale down and look at the charts for entries, exits, setups. This also gives you support and resistance, and it's the only way to really trade. So always look at a stock's past performance to predict future action. Also, you want to trade former runners. If a stock has just stayed steady or stayed flat for the last year, what makes you think that any news is going to create a huge spike in the stock? I mean, unless it's just groundbreaking news, the stock's possibly just going to pop up and go right back into the flow where it's been. You want to see a stock that has had huge spikes in the past. And this way you know this is a former runner or a former supernova. So again, you always look at a stock's past performance to predict future action. The next one is, and this could be number 1 or number 2, very important, is be disciplined. Follow your trade plan to the letter. Follow your risk to the letter. Always be disciplined. The next one, even when you're not in the market, study and stay involved. This is just like the first thing I told you. When you're not in the markets, study. Always stay involved, always know what's the hot sector, what stocks were up on the day, what stocks are down on the day, the market news, what the market did on the day. So always be involved, always study the markets and stay involved. The next one is plan every trade from start to finish. You want to plan every trade from start to finish. So you know where you want to get in, where you want to get out, where your risk level is, and what you're going to do in case of any unwarranted moves in the market. So you want to plan every trade from start to finish. Know what setup is forming, why you want to get in. You want to know your thesis on every trade. You want to know your plan on every trade. So you want to form a thesis, form a plan, and use that plan from start to finish on every trade. The next one is play high probability setups. And the only way you're going to know high probability setups is keeping a trade journal and keeping a trade log. So that goes with one of the things I said before. So you want to play your high probability setups and use these with past performance as well too. And this will stick and give you a good head start in the trading game. High probability setups for me are first green day OTC, first green day NASDAQ stocks. Panic dip buys, gap and goes, using a bull flag, as a gap and go. I mean, these things are all things you have to learn as you're going forward through trading. So you want to play high probability setups. The perfect trade is going to have the perfect chart setup or a very good chart setup. It's going to have a catalyst. It's going to have high volume, at minimum above 2 in relative volume. And you want to have knowledge of this trade and use your discipline. And this will all equal the perfect trade and equal profit. Now, cutting losses is also a very important thing. And in cutting losses, you always want to decide on the risk before entering any trade and stick to your risk level 100%. Also, cut losses intelligently. Use support and resistance. Use your support and resistance levels, and mainly your support levels, to know if it's breaking support. That's where you're going to put your risk in this trade. Know where you want to get out, and get out when it hits that level. Stick to that 100%. Focus on the chart. Focus on the chart. You always want to focus on the chart, the price action. That's what you always want to focus on. Use level 2. You always have to use level 2 while you're trading, because level 2 tells you, you see down the line, you're buying the stock at $1, but you see at $1.06 or $1.07, there's a 300 seller, a guy selling 300 loads or 300 shares of his stock. That might be a risk, saying, hey man, how is it going to break through this resistance? So you always want to use level 2. And there's a lot of videos out there. I will teach you how to use level 2 in the future, but you always want to use level 2 when you're trading. And when first starting out, cut your losses immediately. I can't say it enough. Cut your losses immediately. If your trade goes against the premise or breaks your risk, get out now. Now, another thing I like to let everybody know is never hold through earnings or press releases. Never hold through earnings or press releases. You can ride a stock up in the anticipation of a press release or in anticipation of good earnings, but I never want to take that risk of if something good. Now, mind you, this could be a high profitability, high profit setup where if you hold through earnings and they crush earnings and this stock skyrockets, that'd be great. But it doesn't happen all the time, and sometimes they can disappoint on earnings. And a lot of times it doesn't really matter what they do on the earnings. Is how the stock market reacts to it. It's how traders react to it. So I particularly never hold through earnings. I'll hold up into earnings and get out the day before or earlier in the day before earnings. And usually if people are anticipating or traders are anticipating a good earnings, the stock market, the stock's going to go up and ride up, but you never know what's going to happen once those earnings are released. Just look at a stock that I'm going to be highlighting in one of my next videos is UAVS. This stock went from about $1 all the way up to $5, anticipating this meeting that they were having, this online release where they were going to talk about things, and it was a disaster. It was a disaster, and this stock just plummeted. And there were people buying up there, people that bought at $4, $4.50, $5, and this thing just dropped like a rock in a pond, all the way back down to the 150 range. So you don't want to be that guy. You don't want to be a bag holder way up there, or watch 70% of your entire portfolio or that you have in this trade just get wiped out because some CEO doesn't know how to do a press release, and he drops the ball, and it's just a disaster. So never hold through earnings. Now, rules, and this is something you have to keep in mind, rules mean nothing. So I tell you to make rules and make a plan, but rules mean absolutely nothing if they're not followed. They mean nothing without discipline. So this all boils down to having discipline. So you want to be disciplined. And the last thing, risk must be determined before entering any and every trade. So before you enter any trade, you want to know your risk level. You want to know how much you're going to risk and where the heck you're going to get out of this trade if it goes against you. Look for the next video. I'll be coming out with another couple videos today. I hope this is a big help for a lot of people getting into the markets. Again, John with Tactical Trading. Look out for the next video later today. See you guys later.